Hey, what's up, guys? I'm gonna do a video on another healthcare stock. Uh, I saw there was a lot of interest among the viewers regarding healthcare ETFs or healthcare stocks. So the one I'm gonna do today is called ticker UNH, United Healthcare. Current price is it's actually at a pretty good price right now because if you have been following healthcare, you know that the market in general, or let's say the S&P 500, has tanked about minus 10% in the past couple weeks. So the current price of United Healthcare is $489 per share. So it's still a pretty pricey stock. Um, but let's get into a little bit more of the details so we can make a better informed decision. And again, this is not financial advice, but uh, do your own research before you put any money in general into the stock market. And obviously, there is quite a bit of risk with single stocks. It's better if you're a new investor to stick with exchange traded funds or mutual funds are definitely a lot safer because they have more often than not, they have more diversification than a single stock. So next thing to kind of look at is dividend. So the dividend actually is not too bad. It is 1.7, about 1.74. So 1.7% dividend. So not the highest paying dividend stock, but it's decent. Next thing to look at is P ratio, or price to earnings ratio. So usually a PE ratio of 15 or below is considered uh, decent, and anything above 15 can sometimes be considered overvalued stock. But on the flip side, having a high PE ratio can also mean that a lot of people agree that the stock has a lot of potential to go up in price and share price, or do well as a company in general as compared to their peers. So anything 15 and under is considered usually a value stock, whereas anything above 15 or above can be considered a growth stock. So it just kind of depends what you're looking for as far as investments and your risk profile. So the PE ratio of United Healthcare is 32. So that's pretty high, um, especially for this type of stock. So it's not, I wouldn't call this a super safe value stock by any means. Next thing to look at is EPS, or earnings per share. So you can think of earnings per share, uh, or yeah, you can think of EPS, earnings per share. Basically, it's the company's net income divided by total outstanding shares. So the earnings per share of UNH is 16. And next thing to look at, what sector? UNH is in. Obviously, it's in the name. So sector is going to be healthcare. No surprise. United Healthcare. So it's basically kind of an insurance, one of the bigger insurance companies. Next thing to look at would be 52-week range. Pretty big range. So the 52-week range is anywhere from 436 all the way to a high of $631 per share. So if we take a look right now, the current price is $489. So it's, oops, I messed that up. Sorry. Let's correct that. What was that? I think it's 436. Yeah, so 436 is the low point over the past year, 52-week low, and we're at about 489 right now. So we're not at the very bottom, but definitely we're closer to the low end than the higher end of the 52-week range. So what does that mean? Well, that means that it's it's definitely a better buy right now because it's near the low, 52-week low. But let's hold that thought because I want to cover a couple other things before we kind of give an overall decision whether this is number one, a safe stock to buy, and whether this is the right time or not. So next thing to think about is technical analysis. So technical analysis is basically looking at basically kind of a chart or a graph that graphs kind of the movement of the stock price. So, some people consider technical analysis like reading, basically like reading tea leaves. Um, I mean, personally, I'm probably in the middle. I do believe in some cases it can be helpful on kind of guessing what the stock price will do next or in the short term. But in general, we shouldn't really be guessing stock price in the short term unless you're a day trader, which I don't recommend. Because if you hold stock long term, much more likely to have gains than losses. Uh, so um, so take it with a grain of salt. Whether technical analysis is super helpful, but so let's take a look as far as the 1 year graph. Um, Basically, right now, let's say 1 year graph, we're actually at the near the 52-week low. So in general, the lower price you buy for a stock, the more likely uh, the chance that the stock will appreciate in price. I mean, there's no guarantee it won't keep on falling, but when it's at the 52-week low, uh, more likely to go up than it is to go lower. But again, stocks are not FDIC insured, so there is a risk to it. There's always a risk you can lose all your money. Unlikely if you pick, a large cap, a well-known large cap stock. So yeah, so 1 year chart, if you look at that, we are at the 52-week low, so that's a pretty good buy-in point. But we just want to make sure the long term the stock's not tanking. I don't think so, because if you look at a wider picture, if you look at the 10-year chart, Um, on average, it's pretty much up and to the right until it hit, what was it? I think is like until it hit like December 4th. And obviously that was caused by the Luigi Mangione uh, incident in which he, I'm sure everybody's seen in the news that he murdered the CEO of UNH, or allegedly. So obviously the stock price started falling at that point. Why? Because it brought attention to the fact that uh, UNH or um, healthcare insurance companies are making a lot of money, and some people feel like the CEO in general of most companies, UNH included, was making too much money compared to um, the people who they're supposed to be serving. So the patients supposedly that were covered by medical insurance. So kind of a whole big ordeal. Obviously, read up on your articles regarding UNH so you can make a better informed decision whether this is a safe stock or not. So I mean, over the past 10 years, it's been a super safe stock up and to the right, but with this recent incident, the question would be, uh, how do you see that incident in December affecting UNH and healthcare insurance in general? Is it going to change the amount of profit that this type of company, healthcare company, health insurance company, is going to make in the future? Um, Honestly, I don't know. I don't have a crystal ball. So, if you feel like UNH is going to be business as usual in the next 10 years, then you should, then it's probably safe to buy now, because the uh, stock stock price right now is at 52-week low, so good buy-in point. But if you think UNH or healthcare stocks in general, or healthcare companies in general, healthcare insurance companies in general will tank in the future, then you might not want to buy the stock. So the safest thing is maybe, doing like an ETF or a mutual fund company that focuses on healthcare, such as I've done a video already on XLV, uh, X-ray Lima Victor. So, ETFs or mutual funds usually have multiple stocks, so it increases uh, or it decreases the risk versus compared to a single stock, and it increases diversification. So it all depends on your risk appetite. Do your own research. Um, yeah, so I know it's a lot of information about UNH, but I think it might be something of interest, since it seemed like a lot of people were interested in XLV. And I have done a video in the past on that one as well. Okay, well, thanks for tuning in, guys. Go ahead, click on the next video, and I'll see you there.